Hello guys, and welcome back into today's video. It is going to be a very important video because I will be going over a lot of stuff, especially since I haven't alerted plays in a while, but I finally alerted some plays today which I want to go over and kind of give you guys more understanding and my perspective on these plays. So Bank of America, SPY, all of that good stuff. Now, I was going to post a video yesterday, so I'm very sorry for that. I went to the theater, so I was just very busy yesterday and I wasn't able to post a video. So I will be going a lot in this video. I'll have it time stamped so you guys can actually skip through on YouTube and you guys can kind of skip through the part that you guys want to see. So first of all, I'm going to start off with a play that I've played at a market open on SPY. Now, I was going to alert this play, but it just went by very quick, and I want to give you guys, what I looked at and all of that good stuff. So if we take a look at the SPY 5-minute, okay? So first of all, another bloody day. I'm going to be going over that in a second. But as you guys can see, the SPY 5-minute, we gapped up at market open. So taking a look at the first candles, we had that major resistance, so around 433. So right at market open, we saw that resistance coming in, and 1, 2, 3, 4 candles with that resistance. The second one was our support, so that is kind of like the gap entry. So overall, I've played puts right over here, when we entered in that gap, and that was a very nice play. So obviously closed out a lot earlier for around like a 50% gain, and overall that was a very nice play. It filled that gap. But this is just something to keep in mind whenever we gap up. We usually try to fill that gap, but we don't always. So that is just something to keep in mind. If you do gap up and if it breaks that bull flag, I'm taking a look at kind of like the past examples. For example, this was kind of like the opposite play where it actually used as a level of support. So taking a look at these candles, this was very nice wicks over here and definitely used as a great level of support. So this is just something to keep you guys in mind. Whenever you're taking a look at market open, those first few candles are going to be very important, because first of all, we're going to be having the highest volume on those candles, and everyone is going to be watching at the market open. So I thought I should show you guys that, so you guys learned something new. You guys can take a look at SPY at market open and kind of show that. So if I do see any more those type of plays, I'll try to alert it. But overall, let's close this out and let's take a look at the overall market. So the overall SPY, massive head and shoulder over here, a massive head and shoulder. And taking a look at SPY, again, the head and shoulder is coming into reality. Okay, puts, it looks like puts are the only plays right now. If we take a look at the chart, okay, this is a major level of support. Our next support is at 415, and then the next vital support is 400. So I do think 400 is very possible. Okay, this whole setup is a head and shoulder setup. Plus, 400 is kind of like that major next major level of support, since it also has that breakaway gap down below. So I thought this was also very interesting. We do have coming volume at this point. We just need to hit 400. It looks like we're breaking almost every single level of support, plus this head and shoulder. We're kind of looking very bearish. So the whole market is looking bearish. Mostly, I'm just looking to play bearish plays. I've also played Bank of America. So I want to go over Bank of America because Bank of America looks like a incredible play for puts, which I've played today. I sold out for a very nice around 15%, I believe. So I sold it around for a 13% on Bank of America, and it hit over 20%, 25%, 30%, and it definitely has more room to drop. So I want to take a in-depth look at Bank of America and show you guys and explain to you guys why this looks like a very, very bearish setup. So first of all, we take a look at a bigger picture on the daily time frame. It has been forming a very, very massive channel since December of 2020. 2020, I mean. So as you guys can see, this is a massive, massive channel. Now, what you guys have to understand is that the whole market, okay, was in a channel. So if we actually take a look at SPY and we use this ray tool that I was talking about over here, okay, SPY was in a major level of channel support. So as you guys can see, SPY had this channel going on over here. I'm going to fix this a little bit. So as you guys can see, the whole market was in this very, very nice cycle and a nice channel. And if you take a look at Bank of America is still sitting in at that very, very nice bullish channel. So taking a look, we actually broke that major level of support today. So we broke that major level of support and we closed below 45. So when I alerted this play, I was talking about we need to be below 45 to be a valid play, because now we actually broke that level of support. So pretty much at market open, next week, we're taking a look at a free fall to hit 42.87. So this is going to be our price target for Bank of America. Okay, so 42.87 is that next level of support. So pretty much banks are kind of like the shorts that I'm taking a look at, because tech stocks have already fallen so much. So this support is going to be very, very nice. Again, this is a major level of support. If we take a look back, it was a major level of support. We also have a very, very nice double top. So we have this double top. We're breaking this major level of support, and this is setting up for a very, very nice play on puts. Also, it's a very, very cheap play. If you actually take a look at my play, it was $120, getting puts 3 weeks out. So this was definitely a very, very nice play. Now I did, sell out for 13% and around $160 because, I'm just taking plays very, very consistently and quick in and out because I still can't trust the market. So overall, Bank is looking very, very nice. Now everything is looking bearish. Okay, one thing that is extremely bullish is gold. Okay, so GLD. Okay, we have been talking about this for weeks now. And again, I alerted shares and I've entered in shares. So as you guys saw, okay, I've made videos on gold for almost a month now. Okay, almost a month now, and it is looking very, very nice. So if we actually take a look at gold, we're taking a look at the daily time frame. Okay, let's take a look at the weekly time frame. It broke out of that symmetrical triangle beautifully. Okay, I'm seeing, people up over 155% on calls. Me personally, again, I'm just straight up in shares. Okay, I'm just straight up riding in shares. The reason I'm riding it in shares is because if we take a look at the monthly setup, it has so much room to learn, so much room to grow, because I've got a very, very nice entry. So I've entered in around 170, that breakout level. So there's literally, for me to sell, it's like zero reason. Okay, I don't have to sell gold. So I hope you guys played this. This was the only bullish setup. We had inflation, which was a bullish catalyst for gold. This whole setup is setting up for 3 years, and I definitely do think this is going to be a very, very nice, incredible play for gold. So again, I just went out with straight up just playing shares. It is going to be a small gains, but I did enter in a little bit bigger position. So overall, a very, very simple video. Gold, a very, very nice play. The only bullish play in the market right now. So overall, that is all. I'm taking a look at some quick Yeah, so overall, let's take a look at QQQ. It's not looking good, okay? Head and shoulder broke off that major level of support. The next price target is around 318, and overall 300 is very, very possible. QQQ 300, the SPY 400. Now overall, the market is bleeding, the market is dying. We're down, um, we're down almost 20% from all-time highs now. We have concerns of inflation, we have concerns of war, and this is the time to start scaling in. Okay, now is the time to start scaling in. Again, in the long term wise, taking a look at 5 years, 10 years, the market only goes up. So definitely a great time to start scaling in. Now, what will I be doing? Okay, what am I buying? So I'm mostly focused on crypto right now. So I'm taking a look at Ethereum. I'm looking to start buying up Ethereum around 1,800. I'm looking to hopefully get in on that dip, and I'll be buying a Ledger wallet, which is a very, very complicated thing, which I'll explain probably in a later video. So I'm mostly just watching Ethereum to get in on some coins, and other than that, Amazon. So overall, a lot of great dips. Okay, you guys should not be starting a long-term at all-time highs. Okay, starting at all-time highs, a long-term position was not the smartest choice. So overall, the market is pulling back. Finally, you guys can start scaling on shares and focusing long term. I will be just focusing on Ethereum. So overall, hope you guys enjoyed this video. Again, if you guys are not on any of my servers, make sure to follow me on Twitter because I do post charts. Overall, hope you guys enjoyed this video, and make sure to join the link in the description to my Discord, Exit the Metaverse, which is a NFT and crypto Discord. Overall, hope you guys enjoyed this video, and I'll be posting another video tomorrow, and bye bye.